Let's talk about a popular approach to time the market, and that is seasonality. So we look at the performance within the year and we try to figure out when should we buy within the year, when should we sell within the year. The stock market even has a saying for that, and that is sell in May and go away. And that doesn't really work in Bitcoin, but is there some other kind of seasonality we can use? Now what we see over here, that's the performance of Bitcoin per quarter. So we're not looking at the monthly returns, we are zooming out a bit more first. That's the quarterly returns, and we've got two kinds of averages shown at the bottom. We've got the arithmetic average, that's the second last line. Unfortunately, we can't really use that average that much because we get a lot of skewness, as in the early years we had massive outliers, we had a lot of volatility, and a single quarter of 500% returns can skew the data a lot. So instead of looking at the arithmetic average, it's probably better to just take the median. So what is the data point that splits the positive and the negative side in half? And there is an interesting observation, as in Q4 tends to be by far the best performer for Bitcoin. It appears as if Bitcoin is just preparing to then rally in the last quarter. This year, unfortunately, it does not look like that. Let's zoom in a bit more. This is now the performance on a monthly basis. There is a reason why people call October Uptober, because historically it was the most profitable month in the year. At least again when we take the median, not the average. November tends to be very profitable as well, but the market is very disappointing this year. Both October and November have been very poor performers. In the last 6 years, October had always been positive, not so the year 2025. February tends to be pretty strong as well, and again this year February was very weak. It was actually the weakest month among them all in the last 3 years. So it was already possible to spot back in February that this year might not be as great as usual. There is this idea of the 4-year cycle, right? That we have 3 years of rising prices, 1 year of a falling price. But if we hold Bitcoin for at least 4 years, right, over the course of one halving period, we should be in profit. And that idea that we get in profit after holding for 4 years is expressed through the 4-year moving average. Historically, Bitcoin was always above that moving average. Interestingly enough though, that trend also broke. That was in 2022. Had you bought at the peak of the bull market in 2017, then after 4 years you'd be down, and so holding Bitcoin for 4 years might not be enough anymore. The market isn't growing as much, and so maybe instead of taking 4 years, let's just double it to 8 years. We have a bit of a buffer here as well, and since Bitcoin experiences diminishing returns, maybe that could be the maximum risk that we now take. The 8-year moving average is currently at 36K. So there's still a lot of room to fall. The 4-year moving average might not cut it. Maybe the absolute bottom is at the 8-year moving average. The problem really is that Bitcoin isn't anymore that profitable of a risk on investment. Bitcoin's price moves in similar directions as technology stocks. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. And again, since Bitcoin hit the 20K at the end of 2017, it barely outperformed technology stocks. This is the Bitcoin price relative to the Nasdaq 100. It did not outperform at all since we hit 72K in 2021. So we could make the argument that in the last 4 years, Bitcoin was not a great investment. It tends to move in the similar kind of direction as technology stocks do, so it's not a great diversifier versus technology, yet it has more volatility and it's not outperforming. The most concerning part isn't even that underperformance. The concerning part is that Bitcoin was created as a hedge against monetary debasement. This here is the Genesis block, this is the inscription, a reference to a Times article. Here's a scan of that newspaper. Chancellor on brink of second bailout for banks. So Bitcoin was created as a measure against monetary debasement, as a measure against devaluation of the currency to rescue the elite. So money was flowing from the average person to the people that are already wealthy. Since Bitcoin's creation in January of 2009, the price to sales ratio in the S&P 500 went from 0.8 to 3.3. So by that metric, stocks more than 4x'd in their valuation. The price to book ratio went from 1.8 to 5.5. So that's a 3.6, 3.7x in valuation of stocks. And here's a longer term chart, the Shiller PE ratio, the price to earnings ratio, that went from 14 to 40. So that's a 2.8, 2.9x increase in valuations. Bitcoin was created at the peak of the global financial crisis. This was .com, this was the global financial crisis, and what we see here, that's the S&P 500 relative to the money supply. So really, risk on assets have only expanded in their valuation since the creation of Bitcoin. And that's really the concerning thing. What happens if suddenly risk on assets were to just go back to their equilibrium, the dotted line? That's just the average ratio of the S&P 500 to the S&P 500. If the S&P suddenly was to fall by almost 50%, then how much will Bitcoin suffer? At the top, we see the Bitcoin price. At the bottom, we see the S&P 500. We can see how both sell off during times of crisis. This is the COVID crash. We can also see how they both recover during the same time. They tend to bottom out at the same time. They tend to top out at the same time. The bottoms align. So let's just look at those times of crisis. Let's say we are just in a COVID-like crash. So the S&P 500 went down by 33%. Bitcoin during that time went down by 64%. And so imagine what happens if the S&P 500 was to drop by almost 50%. Bitcoin would probably fall by 80, maybe even 90%. And then even this 8-year moving average support might be too optimistic. Again, because we have never seen Bitcoin experience a real crisis. Bitcoin has only existed during times of expansion. And the COVID crash was just a little bit of a wick in an overall very bullish market. But what was to happen if suddenly things turned sour and Bitcoin sells off just as any other risk on asset? That's the big question. Measures like the average cost basis that used to be very good to time bottoms, they might be too optimistic. Even if we take the long-term holder average cost basis, which is currently at 38K, that still might be too optimistic. It was a great measure in the past to buy the bottom, but again, it very much depends on what is traditional finance doing. If all of the risk on assets are suddenly selling off, as they have done several times in the past, that could lead to all kinds of systemic failures in the crypto ecosystem as well. There's a lot of hidden leverage in many decentralized finance projects as well. Yes, Bitcoin is currently suffering, but we are actually doing okay. We have hedged ourselves quite a bit. And with we, I mean, of course, the premium members of this channel. We haven't lost anything since the beginning of this crash because we don't just always go long. We sometimes also bet on falling prices. We are using, for example, moving averages that tended to work well, and that has saved us massively during this correction. If you want to learn more about the strategy, or if you want to invest alongside with me and get protected in case we continue to fall, then feel free to check out the premium membership. The link is down below, thebitcointrader.com. A link to premium should also pop up here on the screen. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on premium. Cheers.